Hello traders, Gary Wagner here, just around 12 o'clock in Honolulu, 6 o'clock in New York. It is Thursday, October 26th, 2017, and this is the Daily Report for Gold and Silver. Gold and silver are under tremendous pressure as we see a resurgence and surge in the U.S. dollar. Gold closed off by about $11.40 today to close at $12.6760. Silver also taking it on the chin, $16.79, down 13 cents. And as I said, we actually had light buying in the market, but dollar strength over more than compensated for any kind of buying in the market. Dollar index up almost a full percentage point, closing at 94.50. But the real story is not so much dollar strength as much as it is euro dollar weakness, with the euro dollar losing 1.36% and the current exchange rate at 1.16. In the most literal sense, gold prices were under extreme pressure today, actually closing off over $11, currently trading at $12.6750. off $11.50 on the day. When we take a look at our daily candlestick chart, we can clearly see today's destruction of gold pricing as exhibited through this large red candle, which has now moved very, very close to a 61.8% retracement of the entire scope of the rally from 1200 to 1363. There was actually buying in the market, and when we look at the Kitco Gold Index, we can see that buying in the market actually took the price of gold up approximately $3.70. However, once you accounted for an extremely dynamic upside spike in the US dollar, you had to subtract $13.90. The net result of spot or physical gold right now is $10.20 in terms of a drawdown today, with the current fixed price at $12.67. In fact, the dollar gained over a full percentage point today, currently fixed at 94.50. When we take a look at our daily candlestick, we can see the magnitude of today's upside spike in the dollar index. But traders, the dollar index contains a basket of currencies in which the dollar is paired against, and it was truly one particular currency that had this major effect. And the currency that I'm speaking about is the euro dollar, a basic policy change that was announced today in which they will be diminishing the amount of purchases each month, quantitative easing. We saw tremendous pressure in the euro, and the euro actually lost 1.35 percentage points to close at 1.16 when paired against the US dollar. So with that in mind, this is my current thinking about where I believe gold pricing could go in the near future. In terms of our basic Elliott wave count, assuming that the rally, which took gold pricing back in July from 1200 to 1363 was a wave one, and considering recent activity and downside pressure in gold, I am under the belief that we are still in a corrective wave two. We can subdivide this corrective wave two in something like a A. This spike up was our B, and we are in our final C wave down to conclude our second wave. Now, where should we look for pricing to go to? Well, the logical spot would be a 61% retracement. That comes in at 1264. The absolute bottom in terms of a correction, if it's an extremely deep correction, would be a 78% retracement. That would take gold pricing to 1238. Now, while I do not believe that we often see a 78% retracement, we in fact saw that and then some recently as this market declined. So we don't want to take this price point off the table. We want to be aware of this price point, but we want to look, if gold continues to track under pressure, how it reacts at 1264. For that reason, we will maintain our neutral stance, believing that the market still could go lower. And in terms of the price point we want to look at, We're trading at 67. 64.5 is the price point we certainly want to take a very, very deep look at to see if gold pricing finds any support. Traders, as we talked about all throughout today's show, it's really been a fundamental shift or change in policy by the European Central Bank that took the euro dollar down tremendously in terms of value. The reciprocal move, of course, in the US dollar was a strong upside surge, and then the reciprocal move in gold was a tremendous sell-off. Now, if we were in Europe, gold did quite well because it would have done very well against the euro. That's not the case against the US dollar. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for the weekly wrap-up and review. Bye-bye.